Warren Buffett, the famous investor and one of the richest people in the world, has been selling off his stocks and hoarding cash. Does he know something that we don't? Is this a wake-up call, signaling potential market and economic trouble ahead? Would Americans be wise to follow suit? And if so, are there smarter alternatives to cash when it comes to protecting your savings and retirement? Warren Buffett's basic investment strategy is called value investing, which means investing in quality companies at prices below what they're worth. Another way to say it is that he likes fishing in troubled waters. For example, while he hasn't bought many stocks lately in the last decade, but when the Dow was off from its highs by double digits, he saw opportunities in the energy sector and bought Occidental Petroleum and Chevron, which is why now the investment community is paying attention to Buffett's sales of stock and his growing cash hoard, which is now $325 billion. Theories abound. Perhaps Buffett anticipates troubled waters ahead, and he wants to have plenty of cash on hand to buy quality companies whose stock prices sink below what they're worth now. Others speculate that stocks are overvalued, and the time is right to sell and lock in the upside before potential economic trouble ahead. Selling stocks with their prices high, earning some income on that cash while interest rates are still relatively high, and wait to buy stocks during an economic downturn, which could make value stocks cheaper. So, should Americans follow suit? Well, in my opinion, while I can learn a lot from Warren Buffett's current thinking, the scale of our investments are really different. Investing hundreds of billions of dollars is in many ways different than investing hundreds of thousands of dollars. For example, Buffett likes to buy farmland as a hedge against inflation because farmland is a productive asset that could improve its productivity over time, and he doesn't like gold for the same reason, because he believes that gold is a non-productive asset that does not produce earnings, dividends, or interest. Billions of dollars can buy a lot of farmland, but thousands of dollars cannot. So if you believe that stocks are overpriced and that there's a reasonable chance of inflation or recession ahead, selling stocks while their prices are high and locking in the upside seems like a good strategy. But keeping it all in cash, earning 4.5% in a money market, while losing 2.5% to inflation, may not be the basket you want to put all your eggs in. Regardless of savings or retirement portfolios, it helps to diversify to lessen your risk. And you and I have less diversification options than one of the richest people on earth. But we do have one time-tested hedge against inflation and economic uncertainty, and that's gold. If your savings or retirement investments do not include gold, consider diversifying your portfolio to include some gold. One way is to add precious metals to your retirement portfolio through a precious metal IRA. I have one, and mine is from U.S. Money Reserve.